Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, September 24th, 2013. Well, a continuation of the trend to the downside today. A candle that's made a lower high and a lower low. A black body candle, however, and in contrast to the previous day's trading where we saw the buyers attempting to find some upside momentum and closing the market back up above the 93.86 level. So that sentiment in that short-term time frame in net terms has swung back to the sellers and suggesting that the market may trade to lower levels. The only problem here for the sellers is that they've failed to take control of the market. The market is closed roughly around the midpoint level. So whereas the buyers had closed the trading day in control by closing up between the midpoint level and the high in the previous day's trading, the sellers have failed to take control of the market. But the story here really is about the buyers failing to maintain that control. So perhaps something of a shift back towards the sellers and certainly away from the buyers. If we look at the shadow on the bottom of this candle, however, it suggests that the price action has been rejected from below the 93.86 level and from the area around and just below the Tenkan-sen. And looking at today's trading as it's developing, or for tomorrow's trading, we are seeing rejection from the Tenkan-sen again, and that may act as very solid support for this market. Looking to the recent past, this area at 93.86 is held as previous resistance and is now holding as support. So there is a possibility, even though we have a black body candle, that this trend could change. But certainly we're not seeing a lot of strength from the sellers either. So some doubt about whether they can continue that trend to the downside. Now, if we do see a breakout down below, and what I'd like to see is a solid bearish close down below the 93.86 level and below the Tenkan-sen, we could see the market testing down to the window that was opened up. And this is a very large window from 93.06 roughly down to 92.68. And we saw here previously where the window was tested and it held as support, so it may be very strong support for this market if we do trade down to those levels. We also have the cloud extending down from 92.55 all the way down to about 90.86, so very, very solid support down below. If this market does change trend, however, we have some minor resistance around the 94.50 level, and then above there no resistance until the market trades up to around 95.36. In terms of the Fibonacci extension, and here today for the second trading day, we've seen the market test to around the 161.8% level and be rejected from there. So this suggests there is a possibility of a change of trend. But with this black body candle, it does raise some doubt about potential for a change of trend. But the important story here is the rejection and the sellers failing to take control of the market. So a possibility of a change of trend, certainly not as strong a possibility as it was with the previous day's trading, where the buyers took control and we had a white body candle. But still, the rejection here is important. And with the Fibonacci retracement here today, we've seen the market rejected from the 61.8% level as we did for the previous day's trading. And this also suggests that there is a possibility of a change of trend, so we will be looking for a higher high and a higher low. In terms of Ichimoku, a bullish market in all three time frames. And the market is trading up above the cloud, so we have a bullish market in the long-term time frame. The market's also trading above the Kijun-sen, so bullish in the medium-term time frame, and that Kijun-sen is flat. Price action has been attracted back towards there. It's still flat, and there still is a possibility that if this market can break out and find momentum to close down below 93.86, we could see the market testing down to lower levels. In terms of the Tenkan-sen, the green line here, the market is maintaining price action above there. It has maintained price action above there for some time. So the market is still bullish in the fast-term time frame, and that area is holding as support. And for the past 3 consecutive trading days, it's held as support, and it is very significant to this market. And a close down below there, and especially a bearish close, would highlight a strong change in sentiment in that short time frame. So we will be looking for the market's potential to trade down to lower levels. But really at the moment, a lot of mixed signals in this market. The Chico span here is above the corresponding price action, so it's confirming the bullishness that we're seeing in all three time frames. And slightly swinging towards the market trading to higher levels at the moment. Confirmation is required. We are looking for a higher high and higher low, so the high of the current candle becomes important. That's at 94.30. Some minor resistance, as I mentioned, around 94.50. If the market can close above there, we could quickly be trading up to 95.36.